Hey guys, welcome back to the channel. Today I'm going to be talking about some levels where I expect strong resistance for Ethereum. I'm going to be covering some daily and weekly averages, key horizontal resistance areas, and some bearish divergence I'm seeing on some of the lower time frame charts. So if you guys enjoy the content, please do consider leaving a like and subscribing. Also consider checking out our partners and our sponsors over at ftx.us. You can sign up with the link in the description below and get a 5% discount on your exchange fees. It's a great exchange. I highly recommend them. And I'm going to start off by diving into the weekly chart for Ethereum because I think this has the most important level of resistance, which is these two moving averages. So the green one is the 21 exponential average. The red one is the 20 simple moving average. And together they form this band where historically during bear markets, we have seen lower highs and rejections off of. So if we go all the way back to 2018, you can see how we had a key rejection off of this level. That was where the lower high formed back in April in 2018 at around $800. Then we continued lower into these bear market lows. You can also see how back in April of this year, we had a rejection off this level at around $3,500. We had one candle close above it, but the next following candles, we came back below it, continued to hold resistance and rejected. And then we had a move all the way down to the $870 level. So today, these range from around $1,950 to $2,000. And it's going to be a very key level of resistance. One of the things that I also like to do is look at these moving averages for Bitcoin. And we can see that during the last cycle, again, this was a point of resistance. We had these key rejections for Bitcoin off of this level. And it just goes to show you how these moving averages are pretty significant areas of resistance during these bear market trends. All right, so again, they do range from $1,950 to $2,000, and I will expect at some point or another we will be seeing a rejection off of these. Now, that could be a few weeks down the road when maybe we have a failed move above it. We could have a weekly candle coming back above this and then ultimately coming below. Or we could have just a rejection here, a number of possibilities, but I do expect this to hold resistance because we essentially have this current structure in place with the low at $870, and we've basically had 6 green weekly candles in a row coming off of this level. So we're up pretty significantly in the short term, around 120% off the lows. And I think for me, in terms of a bear market bottom, this is a little bit unsustainable of a rally. You can see if I were to just extend out its current rate of change, we could get up to some of those pretty high numbers at its current pace. So again, I would like to see at some point or another a rejection coming back down, and then potentially if we form a higher low, that would look a lot more definitive in terms of a bear market low, because that would have a little bit more confidence behind the chart. You would have that retest of a higher low, and essentially that would make the chart look a little bit better. So I do expect resistance at the 20-week simple moving average and the 21-week exponential moving average. Now I want to switch over to the daily chart, where potentially we can see a little bit of confluence with some of these other moving averages. And what I'm going to be looking at here is the 200-day simple moving average. So that is this purple line. You can see this is where the lower high formed back in April. Yet another point of rejection. All right, and essentially I like to look at Bitcoin once again because it really does a good job at illustrating how these moving averages can be resistance. So I'm switching over here to a daily chart on Bitcoin. You can see back in the prior cycle in 2018, we had this lower high formed off this moving average, a rejection. We formed a lower low, came back up, rejected once again. And you can also see that we rejected here back in April, again, a lower high during a bear market rally. So if this is going to be a bear market rally, this is another point I would expect resistance. And also consider that this moving average will continuously move down. So if I just go back 200 days ago, you can see we are closing prices in the $3,000 level. So essentially this is going to be averaging down. And you can see that if we were to say retest it in a few weeks, it could be at a much lower valuation, which would also represent that 20-week simple moving average. So currently today it is at around 2270, but if we were to say retest it by middle of September, it could be all the way at 2100, because essentially it will be moving down at a pretty quick pace. So I also want to talk about some key horizontal levels where, I also expect resistance, and a lot of these just have confluence with basically a huge area that I think is going to be very difficult for Ethereum to reclaim. So I talked about this in my last Ethereum resistance video, this range going from 1740 to around $1,900. Okay, so this was a point of resistance back here in February. We had a rejection, one more rejection here in March, and then eventually when we broke above it, we had the quick mania blow off top. And then we came back down, flipped it into support. You can see more or less back in 2021, we had a triple bottom off of this range, and then one last bounce here back in May before the eventual capitulation to these lows. All right, so I do expect at some point we will be seeing a rejection here because we have this level that's been defined for about 550 days, 4 key tests of support, and I don't think we're going to be reclaiming it on our first attempt. It's just such a strong resistance point for me with confluence on the other moving averages where I don't expect we're going to reclaim this on our first attempt. Now, I talked about in my last video the possibility that we might have some sort of fake out where we could, go up to, say, the $2,200 region, but if we're coming back below this and then closing below it, that would ultimately look like a failed breakout, some sort of deviation above it, and I would expect us to, again, come back down and potentially form that higher low on the longer term time frame. So again, I do think this is going to hold strong resistance, but we could see essentially a move above it with a very brief period of time looking like a convincing breakout. But again, if we fail to do that and come back below, that would just be another rejection for me. But there is a possibility in which we do flip these into support. So what that would look like, I just want to show all possibilities because this is a scenario and I'm going to be watching this pretty closely to see if this develops. So if we're starting to flip this as support, what that would look like is getting back above this, coming down, consolidating above it, holding it as support, retesting it. And if something like this happens for me where we have multiple weeks actually holding above this, then I'm going to start to consider, well, okay, we flipped it into support and that's looking a little bit more bullish, and we might not be having that second leg down to have, say, a potential higher low or some sort of retest. So those are the key levels I'm looking out for. If I switch over to a lower term time frame chart, I just want to talk about this key pattern here, which is divergence. And essentially what divergence is where you have the closing price and the oscillators doing a different thing. So I'm looking at the RSI here, and this is an 8-hour time frame. Again, it's a lot lower time frame than I normally do, but I think it's good at identifying short-term trends and looking at some sort of relative strength or weakness of a trend. So what the RSI is doing is showing you how oversold or overbought something is, which is going to be a very good indicator for identifying the strength or weakness of a trend. And when you have such a strong uptrend, really just taking us from 1,000 to $1,600 in a matter of days, that really brings the RSI up into this overbought territory. And you can see more or less we've been forming these very subtle higher highs since then, and the strength of this trend has definitely started to weaken. So if I just do an illustration of this, you can see this current rate of change was very, very fast. Okay, we had a very quick move up, and then more or less since then we've had a very big change in the trend in terms of the slope, and we've been moving up at a much slower pace since then. So the strength of this uptrend has decreased. That has brought the RSI down to reset when we have these consolidation periods. And what we're looking at here is divergence, where the RSI is declining, but the price is moving up. So this represents a trend that is beginning to weaken because you're not getting as overbought. Again, we moved up from $1,000 to $1,600 in a matter of days. And since then, we've had such a decline in terms of the slope of this move. So it's showing you that the short-term trend is definitely starting to slow down. We're definitely getting into that exhausted territory where essentially the bulls are not having the prices overbought as we were in middle of July, but we're still slowly grinding higher. So that is the divergence on the lower term time frame chart. And I say all this as we're entering resistance, but I just want to make it very clear that longer term, I'm very bullish on Ethereum. I think if we are to correct down from here and enter sort of this rejection from all these resistance points, I think that would be some sort of double bottom, higher low, where on the long term, that does present another great accumulation opportunity. And again, on the longer term time frame, I really do see Ethereum headed back up to $5,000. So new all-time highs, that's my expectation. So it's important to understand my time frames, where longer term, next few years, I'm very bullish, but in the short term, I think this trend has started to weaken. We're getting towards some sort of potential local high where we come back down, eventually have a retest, and then from there we consolidate a little bit more, leading into a definitive reclaim a few months down the road. So overall, I hope you guys did enjoy the content and the analysis. Once again, you can check out our sponsors, ftx.us, in the link in the description below. Again, I hope you guys enjoyed, and I will see you in the next one.